Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 8th of June and we have our regular Thursday guest, David Kuo, founder of the Smart Investor out of Singapore, with us today. David, as always, great to have you on the show.
Selamat tengah hari, Brian. Apa khabar?
Kabar baik, David. It's Thursday and it's Red Thursday as usual, unfortunately. But David, before we look at the numbers in detail, uh, and get your insights after that, let's first take a look at how crypto markets have performed. Bitcoin is at 26,403. It's down 1.97%. Ethereum is at 1,838. It's down 2.18%. Now, across to regional stock markets, where you are, David, the Straits Times Index is down 0.17%. Bursa Malaysia is down 0.39%. Shanghai is down 0.12%. The ASX All Ordinaries is down 0.35%. The Nikkei is down 1.46%. The Hang Seng is down 0.5%. And rounding up the numbers, we've got the Kospi, which is down 0.76%. So it's a red Thursday. Tell us why, David. It's a sea of red.
Well, it's Thursday. What do you expect? I mean, I'm on, so therefore markets are down. If anybody wants to buy shares, buy them on a Thursday when I come on Brian's show, because it means that you're going to get bargain basement prices. It's a risk-off Thursday. I think that's all we can say. That investors out there are very worried about interest rates. They're very worried about what is going on in the world, and so consequently, they're taking their chips off the table. It is what you would call a clean sweep or a full house. I mean, I've never seen it like that before. Every market that you showed there were on the back foot, and people are very worried about two things. First of all, inflation, and secondly, interest rates, Brian.
Yeah, then of course, because talk about the signals from central banks, Bank of Canada, Reserve Bank of Australia, they've hiked rates despite the fact that, especially in Australia, the Australian consumer is starting to hurt. But because of persistent inflation, central banks basically have had no choice. David, what's then the expectation around the Fed's decision next week?
Okay, I think before we talk about the Fed, I think we need to talk about those two banks that you just mentioned, the Reserve Bank of Australia and also the Bank of Canada. In the case of the former, the Reserve Bank of Australia, it wasn't entirely a huge surprise that they had to increase interest rates, because if you have a look, I mean, their interest rates are still below the rate of inflation, so therefore they had to do something. What was really a big surprise was the fact that they uh, had interest rates on pause for a little while, and you knew that that pause couldn't last forever, and they knew that inflation was building up within the Australian economy, so consequently they came out and they increased interest rates. And I think this won't be the first interest rate hike that they will have to make. And the fact that consumers are hurting and the economy is slowing, that is what central banks want. Bank of Canada, on the other hand, was a bit more of a surprise, because when you have a look at the interest rates in Canada, it is higher than the rate of inflation. But the Bank of Canada is saying that it can see inflationary pressures within the Canadian economy. So consequently, they are trying to be ahead of the curve, and they are increasing interest rates beforehand. So going back to your question, I'm not trying to dodge your question, by the way, but your question about what the Fed is trying to will do, I think it still hangs on a knife edge. Well, what it plans to do with regards to interest rates. At the last meeting, they said it would be data dependent, and that they would be taking a different view on interest rates. But ultimately, if the Bank of Canada is a sign of what is going to happen, then of course the Federal Reserve will have to have a look at inflation within the economy and gauge whether or not it needs to be ahead of the curve. If it needs to be, then I think they will have no choice but to increase interest rates. Pausing interest rates, I think, could send the wrong signal to the market, because then everybody will say, oh, the Fed is now pausing, so when are they going to start cutting interest rates? And if they read the message from the Federal Reserve, there is no chance whatsoever, Brian, that they're going to be cutting interest rates in 2023. And even in 2024, it is unlikely that they will be cutting interest rates in the first half. So all those people out there who are saying, oh, the Fed's going to cut interest rates, go in and pile in and go and buy shares, because it's going to offer you a better return than treasuries, I think they are very badly mistaken. They must be talking up their own book somehow.
Now, David, then that's all bad news. But good
No,
news
it's not
is
bad news. No, I said it was bad news. I mean, controlling inflation is good news, Brian. I mean, we don't want inflation to be out there. I mean, every time you hear about, people saying that it's worrying that the interest rates are going up. Well, what would you prefer, inflation, or would you actually sort of prefer the central banks to control inflation? It's not really bad news. It's
bad news for the consumer. I didn't finish my
okay.
sentence. It was
Okay.
bad news for the consumer.
Okay. Okay. I'll let you finish then. Okay. And so your point being.
Bad news for the consumer, but then it's all not bad news across the region because
Hmm.
Japan is humming along quite nicely and its GDP is revised sharply. It grew 2.7% in the first quarter of this year. So that's really has been, Japan has been the stellar outperformer in the first half of the year, hasn't it?
Yeah, but what do you expect, when it's got the lowest interest rates anywhere in the world? I mean, the interest rates in Japan are still at minus 0.1%, Brian. I mean, I can't think of any other country that's got inflation or got the interest rates at minus 0.1%. When interest rates are that low, it does encourage consumers to go out there and spend. And of course, we have to have a look at inflation in Japan, which is rising. And so Japan has always wanted inflation in the system because they know that with inflation, it does encourage people to go out there and spend money. And the problem with Japan over the last 30 or 40 years is that the Japanese consumers haven't been going out there and spending money. But when they see inflation, running at about what, 2, 3% over in Japan, they think, oh, I better go out and buy that new washing machine that I wanted because, for every
Mhm.
100 yen that it costs, it's going to cost 103 yen. So therefore, I better go out and buy it. And that is what Japan is trying to encourage, is trying to sort of switch that mentality of the Japanese consumer of not going out and spending money and instead going out and saving their money and going out and buying those Japanese government bonds instead. And so for Japan, it's healthy, but for the rest of the world, Brian, it's a totally different kettle of fish. I mean,
Yep.
when you see inflation running at about 5 or 6%, as it is here in Singapore, it is worrying because what will happen is that people will ask for higher wages. And, the moment you do ask for higher wages, it therefore means that inflation is going to be embedded in the system. Japan is different. I mean, but eventually Japan will have to wake up also and say, that minus 0.1% interest rate isn't going to last forever. And the new Bank of Japan governor, Ueda, he will have to actually sort of do something. So it'll be a wake up call for the Japanese people eventually. But for now, they just want to see economic growth, consumers going out and spending money, and they're just putting inflation on the back burner for the moment.
Now, Now, speaking of Singapore and rising prices, rising rents now have basically culminated, and this is according to a Business Times Singapore report, of people moving more and looking at either relocating temporarily or permanently to Johore. What are your thoughts on this? And have you in Singapore then seen this as a clear trend already?
Oh, for sure. Yeah. I mean, my rental has gone up 50%. But thankfully, I am kind of prepared for it. But there are two parts of this story, Brian. I mean, the first one, of course, is that there is another story on Bloomberg at the moment. They're saying that the number of $3,000 a month rental properties in Singapore is vanishing. And so, whereas people previously could be able to afford a $3,000 relatively comfortable accommodation, and it might only represent, say, 25 or maybe even less of their monthly take home pay, those kind of properties are now disappearing. And so, what is now happening, of course, is that uh, people are looking for alternatives. And one of those alternatives is, of course, Johor. I mean, after the pandemic, travel between Johor and Singapore is now relatively easy, apart from, of course, the traffic congestion. But people are saying, if I want to go and live somewhere, why don't I move across the border over to Iskandar, somewhere in Johor, where I can rent a property for maybe 3,000 ringgits, which is only 1,000 Singapore dollars, and then commute to work to Singapore. But two sides of the story. The first one is purely economics, which is that people are saying, I need a roof over my head. I can't afford a roof over my head in Singapore, so therefore I will have to go to, get this, another country to live in order to be able to return to my own country to work. I mean, that is just bizarre. And I just think that this is a wake up call for whoever is in charge of housing policy here to think about whether or not they are satisfying the basic needs of people within their country. I mean, Maslow has this hierarchy of needs, and right at the very bottom of his hierarchy of needs, before you get to all the other things like, oh, you know, self-esteem and my pride and all that, is basic needs, which is water, electricity, and housing, right? We can say that water and electricity, that's fine. But housing, I mean, if you don't satisfy the housing needs of people, you've got a problem. You really have got a problem, people, because people will be looking at you and saying, why do I have to live in another country in order to come back and work in my home country? It's almost like the situation that they had in Hong Kong, where Hong Kongers couldn't afford to live in Hong Kong, but they had to go and live in Shenzhen, right? And then commute to work every day in Hong Kong. Thankfully, travel between Hong Kong and Shenzhen is relatively easy for Hong Kongers because you just simply tap your card and you can actually go between the two jurisdictions. But it's not that easy in Singapore, and people are going to get frustrated, particularly when this work from home culture is going to change, and then people are no longer afforded that luxury of being able to work from home 5 days a week, and instead they have to come into the office 5 days a week. That puts an extra burden on people, and of course it increases the frustration of Singaporeans as well.
David, on that note, and this is for a longer conversation that we must have separately on a different show. Thank you very much for your insights, David, and thanks for coming on the show.
You're welcome. Thank you.
I'm Brian Fernandez, and we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.